Hey guys, my name is Nicolette Save, also known as the Financial Bunny. On today's episode of Nicolette Save My Finances, we've got a question around property business. Let's hear what the question is.
Hi, Sis Nicolette. I am Sitembele. I just want to find out if you want to be in the property business. Is there any way that you can get funding, or how much capital do you need to start to be in the property business? Thank you very much.
Remember that none of my videos constitute as financial advice, but if you are looking for financial advice, please speak to somebody who is certified and registered with the FSCA. So let's get straight into the question. How do I get into the property business? But I think for starters, let's define what the property or real estate business is, right? First and foremost, when you talk about property, you're talking about physical, non-immovable property, which is your buildings, right? When you talk about real estate, we're talking about the entire business. So it's important that when you talk about going into the business side, you mention it as real estate business, because it could also mean that there are various other factors that you do need to look into. So now what is it? It's either you're going into this type of a business as part of your asset allocation, because some of your income you might want to put towards the real estate side so that you can diversify your portfolio. If, let's say, you've already got shares, if you say you've already got bonds, you might have cash equivalents, and perhaps maybe you've got some other commodities, right? So let's say you are looking now to diversify into real estate as an asset, as part of either your asset allocation or a big booming property business, right? So if you're going into a property business as a standalone, and it's not part of you investing perhaps maybe also into the real estate market, you now are probably either buying, sourcing, selling, or acting as a middleman when it comes to any type of property purchases. So let's get straight into it. What happens if you... Now let's start here. Now we all know, obviously, property is a large-scale business, right? When I say large-scale, it means that most of us think of property as a high-purchase asset. So we think about buying property, we think about having lots of money, and we think that only people that have lots of money can go into the real estate business. But that is not true. There are ways in which you can still climb the property ladder, or versus you still being able to get into the property or real estate business, right? So let's look at some of the alternatives. The first one, obviously, is buy to let. That's probably the one that a lot of us know, is when you buy real estate, or when you buy property to be able to rent it out. It be residential property, student accommodation property. It may be the likes of, having a property that you can put on Airbnb, having short-term lease type of property that you might be renting out to corporates, and then also commercial property, which you might be renting out to businesses and SMMEs, right? So that is your buy-to-let property. So you obviously need to have a cash outflow there, because you need to actually buy the physical property so that you can actually rent it out. The other option is your property shares or property equity, right? So this is you buying either into an existing property company. Say, for instance, let's look at property equity. Let's look at companies that are perhaps maybe not listed, but they are property companies. You can have a conversation with that property company shareholders and say, I'd like to buy a percentage of that company. It doesn't matter what the company does, as long as their business is in the real estate side. Then there's property shares. These are JSE listed shares. So you can buy various individual shares of property listed shares. For instance, things like your Barwin properties, things like your, what else is listed? I can't think at the top of my head of some of the property listed companies. Then there's also what we call property real estate, they are real estate investment trusts, REITs, which you can buy into, right? These are things like when Liberty has properties in the, let's say in the CBD, Santa CBD, and they've actually listed them as a trust. So you can now buy into that specific trust. Then there are things called ETFs and unit trusts that are property based. In other words, the foundation of that unit trust or that ETF is majority a property one. So there's a diversification of the different properties in there. Now we know that listed property shares always take a big knock. So it's really, really important for you to be careful with that one. Get the right financial advice so that you can buy the correct listed property. Then we've got another one called buy to sell, right? So a lot of people, they call this flipping. A lot of people, what they do, they buy to sell. So they will buy either rehabilitated properties or properties that just need a little bit of love and care and a bit of a paint job, or properties that where they are being sold under value. For instance, if somebody is in financial trouble and they need to sell their properties, or somebody is moving out of the country and they feel they need to sell their properties, or they can no longer keep up with the repayments of their property, what they would normally do is they would try and sell that property under its actual value. And this is where you actually get value property investing, right? Where you buy certain properties under their value, and when the property market kind of asserts itself and the properties go to its real intrinsic property value, then you can sell these properties at the right price. In other words, you now make a margin. That margin is the profit that you would then be making, right? Other people, what they do is they flip properties very quickly, and before the bond is actually registered and monies need to be transferred, the buyer already transfers the money into their account, and they actually offset buying that property before the bond is actually registered. So there's something like that you can also look into, where you play the middleman, basically, where you buy a property from another seller, right? You flip that property, you renovate it, you sell it at a higher price to the next buyer, right? That buyer transfers the money that they buying the property in before your bond for this one's property, or for the sale of that, the initial sale is actually registered. So that's called flipping property. It is a bit of a complicated thing, and you actually need to have probably a database of cash buyers specifically, or investors who invest in property, because even though you are going to get the property under value and you're going to flip it, you still have to sell slightly under value so the investor sees any type of value into buying your property, right? Then there's something called fractional renting. It's not necessarily fractional renting. That's not the correct word, but it's when you buy more house than you need and you realize that you've bought more house than you need. What you then do is you rent out some of your unused property space. So for instance, like me, I've got a 4-bedroom house, and basically I can only sleep in one room realistically at a time, right? If I find myself in a situation where I'm like, actually I need a little bit more money, I can then rent out the other 3 bedrooms, right? And then that's how I make my money. So if you find yourself in a situation where you're trying to climb onto the property ladder and you do have more house than you actually need, this is a good way for you to be able to start making a little bit of money out of property. And remember, it does become a property business as long as you are dealing with real estate or property, but remember, you need to then register it as a business, and it means that you're going to be incurring tax, and the types of tax that you're going to be paying is called income tax, because you're actually making money from the rent, right? And then the last part or bit of how do you climb onto the property market if you don't have the amount yourself is something that got popular a little bit earlier on. It's probably still popular in South Africa, property stokvels, or property investment clubs. And basically what you're doing is you're coming together as a group of friends, a group of partners, joint partnerships, where you guys raise the funds to be able to buy a property together. You can raise cash, or you can raise a home loan credit application together as a joint application, where both of you or all 3 of you or all parties that are part of that joint account are going to be risk assessed and credit assessed, and then all of you guys can then buy the property together. So I hope this answers your question. The other thing that you got to remember is that when you are buying and selling property, the moment you sell, you immediately incur what is called capital gains tax. So it's very, very important for you to understand that if you are going to be selling property, you are going to incur capital gains tax. Very important. I hope this answers your question, and mwah.